Canada announcing retaliatory tariffs of up to 50% on $20 billion worth of U.S. imports and an escalation of the growing trade war between the two countries. Joining us right now to talk about all this, former Labor Secretary Robert Reich. He's UC Berkeley Emeritus Professor of Public Policy. His latest book, coming up short, a memoir of My America, is out in paperback this week. We got to talk about so much. The trade war, wealth taxes, AI. I want to hit everything. We haven't gotten a chance to talk to you in a long time, Mr. Secretary. So help us understand just your sense first of the trade war with Canada and whether you think how damaging do you think this trade war is going to be for the U.S.? How damaging do you think it is for Canada?
I think it's very damaging for both sides. Trade wars are very bad. They're bad for the economy. They're bad for American workers. They're bad for American consumers. They're bad for Canada. And to have a trade war with Canada, it's if this were a joke, if this were a sort of a Mel Brooks movie, that would be one thing. But it's not a joke. I think our president is simply lashing out because he wants to show dominance. He feels so trapped in Iran. He feels so trapped by so many forces that are now working against him that Canada is just an easy mark for a bully. And that's what bullies do. They look for easy marks.
What do you think the true economic implications are for us? Or do you think there's something else that's broader?
I think the economic implications, Andrew, are rising prices. What I really worry about is home prices. We have a housing sector that is already in trouble. And as Canadian wood products become even more expensive, forest products, you're going to see housing becoming, again, even more of a basket case. Add in the long-term treasuries, the effect on mortgage rates. Well, this is a major, important sector of the economy that is a particular problem for young people trying to get into housing, into the housing market. I see the Canadian trade war as just irrational, completely and totally irrational.
Let me ask you a question about affordability, because I think that's the watchword of the moment. It's the watchword politically of the moment. There's a whole bunch of folks, including the mayor of this city, that have successfully campaigned on affordability. And yet a lot of the approaches that have been discussed have included things like freezing rents, creating new supermarkets and things like that. And haven't, I would argue, focused on the supply part of the affordability problem. If you were to be able to solve the affordability problem in America, whatever you think that even is, how would you do it?
Well, I would not do it with a trade war. I would not do it with tariffs. I would not do it with a major war in the Middle East. I think all of these things are actually making consumers more desperate and everything less affordable. I think the way you deal with the trade war is you stop it. The way you deal with the affordability crisis is to give consumers a little bit better a deal. One of the biggest things that government can do and should be doing is to get the price of health care down. Now, for years, Andrew, we have talked about single payer. We've talked about Medicare for all. We know how much complete fraud and spending that is unnecessary is part of our healthcare system. Well, that would be one major place that I would go to, even before I go to trying to end trade wars and deal with real wars in the Middle East.
Let me ask you, we've been talking a lot about California recently and the big debate over wealth taxes. I follow you and a lot of things you say online and elsewhere. I'm curious about what you think is going to happen in that case, whether you think that the wealth tax is going to go through. But what do you think it means more broadly for the United States if it does?
Andrew, the background of almost everything we're talking about is the political reality today that the strongest forces in American politics are a kind of Well, they're populism. They're a kind of anti-establishment, anti-elitism, and a lot of that is being driven by the K-shaped economy. I don't care what Scott Bessent says. We do have a K-shaped economy. Inequality is widening, inequality of income and wealth, and that, people understand. Americans are not stupid. They know that more and more of the nation's wealth is being held in fewer and fewer hands. And so a wealth tax appeals to most people. Most of the polls show everybody is in favor of a wealth tax. I think in California, I don't know whether we're going to get it because the governor, for I think political reasons, doesn't want to push on a wealth tax. And I say political reasons, I don't want to impugn his integrity, but I think that there is a lot of resistance in some reaches of the Democratic Party and obviously the Republican Party because wealthy people are the funders of campaigns. But the fact of the matter is that a wealth tax is very popular. It is. We are going to see it inevitably. And in fiscal terms, in terms of balancing our budget or coming even halfway close to dealing with a $40 trillion budget hole, we're going to have to raise taxes on the wealthy.
But let me just ask you this on the wealth tax itself, because I think there's a philosophical question, at least I have the question, about taxing unrealized gains. Meaning, I think there's a meaningful conversation to be had about, A, getting rid of all the loopholes, people who are, taking loans against their stock, step-up basis at death, carried interest, 1031s. By the way, capital gains unto themselves. In an AI age, when we think about labor versus capital, I could make, I think, a fair argument that those rates could go up. I think the idea of taxing unrealized gains is actually a much bigger issue. No?
I do. I agree with you completely, Andrew. I think it's a huge issue. And I think because we are now in an economy in which capital gains are really at the centerpiece of the division between the wealthy and the poor and the not so wealthy, capital gains are going to be really in the crosshairs of what everybody is going to be talking about when and if Democrats gain the majority in Congress. But I also think on the table ought to be getting rid of the stepped up basis at death rule, which I think, if you don't like a wealth tax, then I think the next best alternative in terms of dealing with capital gains and also dealing with widening inequality is getting rid of the stepped up basis at death rule. And so, because otherwise you have large family dynasties who are going to be carrying huge amounts of wealth from generation to generation to generation. That wealth builds steadily. And you are seeing more and more of a disparity between the wealthy and everybody else, which aggravates many of the political tensions we're seeing in this country.